Millions of American families move from one state to another each year, and as you can imagine, there are many reasons why you might pull up stakes and relocate to a different state. You might move to start a new job, be closer to relatives, live in a warmer climate, or even, as a sign of the times, escape a coronavirus hotspot. As our state-by-state guide to taxes on middle-class families shows, state tax rates for the average American family are literally all over the map. And the difference between living in a high-tax or a low-tax state can be thousands of dollars each year, depending on your family's tax situation. In this video then, we're going to be taking a look at the top 10 states in America that are tax-friendly. And wait till you see the top 3, some real surprises, so make sure you watch till the end. So let's cut to the taxing chase. Number 10. Delaware. Delaware's income tax is relatively high for our hypothetical middle-class family. The state's top income tax rate of 6.6% hits anyone with more than $60,000 of taxable income, which is a comparatively high rate for people in that income range. However, low sales and property taxes earn Delaware a spot on our list of the most tax-friendly states for middle-class families. Sales taxes can't get any lower than they are in the first state. There's no sales tax in Delaware. So you can shop till you drop in Delaware without paying a single penny of sales tax on your purchases. Right, that's me off. When it comes to property taxes, Delaware has the 7th lowest median property tax rate in the nation. As a result, the tax on a $300,000 home owned by your hypothetical family is estimated to be just $1,686 per year. Number 9. Alaska. Your overall state tax burden is certainly going to be low if there's no state income tax. That's why 6 of the 10 states on this list don't impose an income tax at all, and Alaska is the first of those states. However, there's more to the last frontier's low tax burden than just the lack of an income tax. Alaska is one of the 5 states with no state sales tax. If you're heading north to Alaska, just remember that local sales taxes up to 7.5% might apply, but according to the Tax Foundation, the statewide local sales tax average is only 1.76%. Property taxes are middle of the road in Alaska. If our hypothetical couple were to purchase a $300,000 home in the state, their estimated property tax bill would come to about $3,546 per year. That's a little above the US national average. There's one other thing about living in Alaska that's worth noting. Alaska gives each legal resident who has lived in the state for a full year an annual permanent fund dividend. The 2020 dividend was $992. The highest payment ever was $2,072 in 2015. And next up at number 8, North Dakota. Even though North Dakota imposes an income tax, its income tax rates are relatively minuscule, especially for mid-level earners. For our rankings, North Dakota's income tax on our hypothetical family is the lowest of any state that imposes an income tax. Sales taxes in the Peace Garden state are below average too. The state rate is a modest 5%. Local governments can add as much as 3.5%. However, according to the Tax Foundation, the average combined state and local sales tax rate is 6.96%, which isn't too bad, really. While not dirt cheap, property taxes in North Dakota are quite reasonable. The tax on a $300,000 home is estimated to be $2,958 per year. That's only slightly above the national property tax average for a home costing that much. And then at number 7, Arizona. Low income taxes are what put the Grand Canyon state on this list. Middle-income families like our hypothetical taxpayers don't pay the state's lowest rate at 2.59%, but at 3.34% they don't pay much more. They also avoid the 3.5% surtax on taxable income over $500,000 for joint filers and over $250,000 for single taxpayers that takes effect in 2021. Note that the surtax can't increase the overall top rate above 4.5%, which effectively nullifies the surtax for the 2021 tax year. The surtax is being challenged in the courts and ultimately might not be applied. That's clear then. Arizona residents benefit from low property taxes too. The median property tax on a $300,000 home in the state is estimated to be only $1,851 per year, which is well below the US average property tax for a home at that price point. The state's sales tax is higher than average, though. It starts with a 5.6% state sales taxes. However, all 15 counties levy additional taxes, as do many municipalities. As a result, the average combined state and local sales tax rate is 8.4%, which is the 11th highest in the US, according to the Tax Foundation. Next up at number 6, California, the Golden State. Wait, what? California is a tax-friendly state? Yes, for middle-class families. If you're a rich person, California taxes will cut deep into your earnings. But for other people, the Golden State's tax hit isn't really all that bad. Our hypothetical middle-class family's income tax bill was the third lowest among states that impose an income tax. Everyone makes a big deal about California's 13.3% income tax rate, which is the highest top rate in the nation, but only a small percentage of Californians pay that rate. In fact, with 10 different tax rates, California has a very progressive income tax system. Our middle-income family, for instance, only fell into the state's 6% tax bracket. That's not too bad. Although property taxes are sky-high in Silicon Valley and certain other parts of the states, property taxes are below average for the state overall. For a $300,000 home in California, the statewide estimated property tax is only $2,187, which is the 16th lowest amount in the country. $300,000 might get you a hole in the road in Hollywood, by the way. Sales tax is one area where Californians might pay more than the residents of other states. The California state sales tax rate is 7.25%, which is the highest state rate in the nation. However, local sales taxes, up to 2.5%, aren't very high. The Tax Foundation calculates the average combined state and local rate to be 8.828%, which is high. Next in, at number 5, into the top 5, Washington, the Evergreen State. The only reason why Washington makes this list is because it doesn't have an income tax. Without that tax break, the Evergreen State certainly wouldn't be considered one of the most taxpayer-friendly states in the nation. Sales taxes in Washington are pretty high. The state's sales tax rate is 6.5%, which is well above average. Plus, at 9.29%, the Tax Foundation's average combined state and local sales tax rate for Washington is the 4th highest in the country. Property taxes in Washington are more modest. For a $300,000 home, the average tax bill in the state will run you about $2,787 per year. That's a middle-of-the-pack amount when compared to other states. In at 4, it's the volunteer state, Tennessee. There's no income tax in the volunteer state. There used to be a tax in Tennessee on interest and dividend income, but that expired at the end of 2020. The tax rate was 1% in its final year. Property taxes in Tennessee are reasonable too. Our hypothetical middle-class family can expect to pay only about $1,908 per year for a $300,000 home. That's well below the national average. Tennessee sticks it to you when you're shopping though. It starts with a 7% state rate plus 2.75% on part of the price from $1,600 to $3,200 of single items. But then local governments can tack on up to 2.75% more in taxes on each sale. At 9.547%, Tennessee's average combined state and local sales tax rate is the 2nd highest in the nation, according to the Tax Foundation. Ouch! Into the top 3 then, and at 3 it's the Sunshine State, Florida. Florida has no income tax. Let me say that again. Florida has no income tax. That keeps the overall state and local tax burden down for middle-class families and everyone else. However, other taxes in the Sunshine State are just average when compared to other locations. For instance, property taxes are right around the national average. For a $300,000 home in Florida, our hypothetical middle-class family's estimated annual property tax bill is $2,490. That's pretty much in the middle when compared to other states. The state's average combined state and local sales tax is middle of the road too. It's 7.01% according to the Tax Foundation. That's based on a 6% state tax rate and local rates that can be as high as 2%. Next in at number 2, the Silver State, Nevada. Middle-class families in Nevada love the fact that there's no income tax in the state, but that's not the only tax perk for residents of the Silver State. Nevada also has the 4th lowest average property tax rates in the country. So if our hypothetical middle-class family owned a $300,000 home in the state, they would only pay an estimated $1,599 in property taxes each year. Sales taxes in Nevada aren't so low though. There's a relatively high 6.85% state sales tax rate. Then when you add in local taxes, the average combined state and local sales tax rate shoots up to 8.23%, which is the 13th highest in the country. And now, drum roll please for the number one. It's the equality state, Wyoming. Congratulations, Wyoming! You're the most tax-friendly state for middle-class families. Right. One reason why Wyoming earns this distinction is because generous revenues from mineral and energy extraction continue to flow into the state. That allows the equality state to keep taxes on residents low across the board. There's no income tax at all in Wyoming. As with many of the other states on this list, that's the driving force behind the state's favorable ranking. However, as always, what makes Wyoming unique is that it always has both low sales taxes and low property taxes. The state sales tax rate in Wyoming is a modest 4%. Municipalities can tack on up to 2% more, which isn't that much. As a result, the state's combined state and average local sales tax rate is the 8th lowest in the country, according to the Tax Foundation. People who move to these parts like to own a lot of land, and low property taxes make that dream affordable. The property tax on our hypothetical middle-class family's $300,000 home in Wyoming would be about $1,725, which is tied the 10th lowest property tax amount in our rankings. And there you have the top 10 most tax-friendly states for middle-class families in the USA. Just take a moment to let those figures sink in, would you? Did you like what you saw? Let us know in the comments down below. Oh, share this video with your taxi friends, and don't forget to subscribe to our channel Trip Xtreme for more fantastic top 10 lists. See you next time, taxpayers!